we're gonna go through all of the stuff today. We have some new things to offer you. We have some new forecasts for the next month, for the next 3 months about the S&P, about specific stock. So it's gonna be interesting, and we're gonna start in a minute or two. I'm still seeing people are joining us, so let's wait for a minute or two and then we'll start. Meanwhile, feel free to ask us questions during the webinar at the Q&A at the bottom of your screen. You can ask us whatever you like about stocks, about the algorithm, how it works, and we'll try to answer all of your questions by the end of this webinar. So please feel free to do so. We'll start in a minute. And in the meanwhile, please write us in the Q&A, what do you think about the market if we got to the bottom, or still thinking that the market will go down in April? Let us know what do you think, and then we'll see the forecast about the S&P at the end of this webinar. So write us down, what do you think is going to happen? Okay. Okay. Before we start again, please feel free to ask us question through the Q&A, not the chat, through the Q&A, and we try to answer the majority of your questions. And in the end of this webinar, we'll see what's the algorithm think about the S&P for the next month. Some of you already said that the trend is down and maybe we are flat by April. Interesting. Write us down what you think if you got to the bottom, and we're going to start after I'll read quickly the disclaimer that INOFIR's daily market forecast does not provide personal investment or financial advice to individual or active personal financial, legal, or institutional investment advisor, or individually advocate the purchase or sale any of security of investment use particular financial strategy. All investing stock forecasts and investment strategies include the risk of loss for some or even all of your capital. Before purchasing any financial strategies discussed on this website, you should always consult a licensed financial advisor. And I think we are ready to go. Yaron, you ready?
Yes, I'm ready, Ben.
Yeah.
Let's start. Okay, for those of you that are attending the webinar for the first time, we are going to start with a quick introduction of I Know First, the technology, the team, our business model, and also some of our clients. We are an AI company. Our main solution is a predictive algorithm that generating daily forecasts for the financial markets and identifies the most promising investment opportunities on a daily basis. We are utilizing artificial intelligence, deep learning, artificial neural networks, genetic algorithms to predict the financial market. Our predictive algorithm is generating daily forecasts for over 13,500 assets from different asset classes, equities, ETFs, indices, commodities, currencies, cryptocurrencies, interest rates, with daily forecasts for multiple timeframes, short-term, mid-term, and also a long-term. This is a global solution. We are analyzing the over 50 global stock exchanges, including the stock exchanges in the US, Europe, China, Japan, India, and more. And if we are jumping to a quick example from the recent month, actually 2 examples that we would like to start with. On the left side, you can find our top 10 forecast from 1 month ago, from the end of February. We can see that first, the algorithm had a bearish forecast for the S&P 500. We can see the S&P, the negative forecast for the S&P that was issued by the end of February for the time frame of 1 month. You can always find the time frame on the top of each forecast. And you can see that the strongest signals came from the bottom of this forecast, meaning stocks to short. And here we can see also the performance of this forecast after 30 days. We can see the negative performance of the S&P 500, and also the performance of the stocks, assuming that we were shorting them. But the most important thing in this forecast is actually the market intelligence element, the negative prediction for the S&P that was issued by the end of February. It was a good call to stay out of the market during this period. And on the very same time, we can find the ETF forecast that the algorithm was generating on February. We can see the ETFs that the algorithm on the right side. We can find the ETF that the algorithm was picking around the same time. We can see European ETFs that basically the algorithm was suggesting to buy. We can find here Italy, we can find here Sweden, EWD, EWI, EWP. We can find here Euronext 50, an additional European ETF that are traded in the US. And we can see the outperformance of this forecast versus the benchmark, versus the index. Right, Ben?
Yeah, we can see that right in the beginning of when the market went down, we saw that the algorithm gave the much more weight to the European stock exchanges and the European stocks, and we can find it here in a variety of countries that those ETFs were presenting, such as Denmark, Italy, Spain, as you said, that made some really good returns. And while the S&P went down by 4%, and we're going to talk about it during this webinar later on.
Yes, this is just a quick illustration of our AI algorithm is working. So let me introduce the team. The I Know First predictive algorithm was developed by our R&D team that being led by Dr. Lipa Roitman, the co-founder of I Know First, with over 23 years of experience in the field of artificial intelligence, machine learning, PhDs from the Weizmann Institute of Science. Dr. Reutemann is leading our R&D team. Besides Dr. Reutemann, we have in our R&D team math professor from Tel Aviv University, people with the background of data science, computer science, math, statistics. Ben Rubin, that is going to lead today the webinar, is our head of our advisory team. Ben used to work for one of the leading banks in Israel as a financial advisor. My name is Yaron Golger. Nice to meet you. I'm the co-founder and the CEO of I Know First. I'm also lecturing for FinTech at the Reichman University. I'm an engineer with MBA from Ben-Gurion University. The I Know First predictive algorithm is being trusted by the world's leading hedge funds, family offices, investment houses, banks, brokerage firms, as well as high net worth individuals and retail clients from all over the world that utilizing the predictive algorithm in order to identify opportunities in the market on a daily basis or to monitor their own portfolio. In this list, you can find several banks, several hedge funds, family offices, and also investment houses that during the last year have partnered with us, and we have built several financial products that are being listed in the Tel Aviv Stock Exchange right now. We did it in a partnership with Meitav. The solution that you're about to see has received several awards, including from UBS, Entity Data, from the Geneva Wealth Tech Forum, and also Entity Data in Japan, from Japan. We are also proud to be part of the Wealth Tech 100 list for 2025. Here you can see several photos from different awards that we have received. We are really proud to do and to actually deliver a fintech course in one of the leading universities in Israel. We are doing it already for the third year. And in our website, you can find media coverage about our algorithm, and also client review that can assist you to identify the best package for you. Okay, Ben.
Yep, and you're more than welcome to join our WhatsApp group in which you get the daily updates about the market, about interesting stocks, some forecasts, some AI articles. And if you'll join today, later on in this, at the end of this webinar, we're gonna actually publish a Palantir forecast for the next 3 months. It's gonna be interesting forecast in this crazy market that we're experiencing. So just scan the QR code and join to our big community, our growing up community, and see forecasts and interesting updates of the stock market. And we will happy to see you there. And
Yes.
in the same way, you can join our YouTube channel while we uploading clips and videos on a daily basis. Also talking about comparing stocks, talking about the market, showing some future forecasts. So please follow our YouTube channel.
So basically, we are providing two solutions to our institutional and retail clients. On one end, we are providing daily forecast that basically identifying the best opportunities in the market on a daily basis, and also generating daily focus for the market, so you can decide whether you would like to be in the market or to wait for better timing. This is the first solution, daily forecast, that being sent to your email on a daily basis. Daily forecast for multiple time frames, for the short term, for the midterm, and also for the long term. Every day before you starting your day, there is an updated AI power forecast that is waiting for you, that mapping the best opportunities for the different time frames that we are covering. Again, short term, midterm, and also long term. On top of that, we have developed several systematic trading strategies that are relying on our daily forecast. This is an institutional solution. We are going to discuss it in the webinar as well. But the main idea is to actually convert the daily forecast into a systematic strategy, and to convert each systematic strategy into an investment vehicle, AI-powered investment vehicle. We are going to discuss it in the second part of this webinar. The INO-first solution, the INO-first AI algorithm, includes 3 components. By utilizing the first component, it's possible to identify the most promising investment opportunities on a daily basis. The second component is providing us on a daily basis stock market intelligence, daily forecast for the main indices, for the S&P, for the NASDAQ, for the Dow Jones Index, for the Russell 1000 and 3000. This component is also providing us daily sectorial forecast, assisting us to identify the leading sectors in the market for the different timeframes that we are covering, and also predictions for sectors that we should avoid. And of course, this component is also providing us daily regional forecast that can assist us to identify promising regions around the globe that we might want to focus on in our investments by using ETFs. The third component is providing us a customized solution. We can train the predictive algorithm based on each client portfolio and to provide a customized forecast for each client portfolio. And by combining those 3 components, it's possible to enhance the investment process, to identify opportunities on one end, and also to optimize the portfolio that we are managing right now. So how we do it? Our predictive algorithm is relying on quantitative data sets that are coming from the entire financial market. We are gathering data sets that are coming from the interest rate environment, from the equities market, from the over 50, basically global 50 global stock exchanges, from the ETF market, from the commodity market, from the currency market, even the cryptocurrency market. We are adding all the daily data that we are gathering on a daily basis, thousands of basically data sets, and we are adding it to our database. We are managing database with historical data, and around the clock, the algorithm is learning from the new data that's coming from the market, learning from the historical data, and also from the combined data. And on a daily basis, the algorithm is building the complex network that existing in the financial market by relying on our technology. Every day, this complex network with the thousands of correlation sets is being built without any human intervention. And you are receiving the bottom line. You are receiving the daily forecast that includes the timeframes that we see on the right: 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. Every day, the algorithm is identifying the most promising opportunities for those timeframes. And on top of that, it's also providing us daily forecast for the trend, for the upcoming trends in the market, in the near term, in the midterm, and also in the long term. As a self-learning algorithm, the algorithm is also learning from each forecast, from each successful forecast, and from each unsuccessful forecast, and it's part of the knowledge that is being utilized in the following day, basically. So it's a live system that identifying the opportunities on a daily basis to you, and you are receiving the output, the bottom line of this complex process. In terms of the technology, we are utilizing and combining different cutting-edge AI approaches. We are utilizing artificial neural networks. We are utilizing genetic algorithms, reinforcement learning. The goal of the predictive algorithm is to focus on the most predictable assets in the market. Not everything is predictable. However, the algorithm has the capabilities to identify the predictable part in the market and to filter out the assets that are less predictable. We can do it for different investment universes. If we're taking the S&P 500 universe as an example, every day the algorithm is able to focus on the most predictable assets from the S&P 500. So if we take in the entire US market, we are applying our technology, we are focusing on the most predictable assets, and then we are ranking all the assets, all the stocks based on the signal. And then you're receiving the bottom line, basically the best stocks for the different time frames. And this process is being done on a daily basis.
Okay, so how to read the daily forecast and how it looks like. The forecast comes in the shape of a heat map, while the green cells represent long position and the red cells represent short positions. You can see that we are using two indicators to rank the entire investment universe. The first one is the signal. The signal is the number that is in the middle of each and every square. It's actually help us and represent the potential movement of the specific asset or this price deviation. And with the signal, we know which stocks or which asset supposedly is supposed to move the stronger for the long direction or the short direction. In this example, when we see MHO, for example, then we can see that the signal is the strongest signal is located on the top left part of the table, and it's going down until CORT that is located on the bottom right of the heat map, which has the negative strongest signal. And the other indicator, the second indicator that we use is the predictability indicator, which is a really important indicator. It's actually help us and represents how good the algorithm can read the specific assets. It moves from -1 to 1. It's Pearson correlation coefficient measurement. And for example, just to understand how it works, 0.0 represents 50% probability that the asset will move to the predicted direction, while 0.5 represents the 75 probability, and 1 represents 100%. So we always want to choose the highest predictability levels. Same goes to the signal. We're always trying to choose the highest signal values and the highest predictability values. We'll see a few examples of how exactly the signal and predictability help us to do the best stock picking. In this specific slide, we can see that the forecast actually comes, as Yaron said, in 6 time frames. In each and every time frame, you have the best stocks to long or short to the specific time frame. For example, we can see for the 7 days, we have 10 stocks that the algorithm actually suggests us to hold or buy for the next 7 days. In the bottom, in this case, we have only 4 stocks to short. The algorithm gives us the best stocks that he thinks that we're supposed to short or maybe sell if we're holding those stocks. So in each and every time frame, we have 10 stocks to buy or to sell. And as we can see, we have 6 time frames, shorter time frames like 3 days, 7 days, and 14 days, and longer time frames of 1 month, 3 months, and 1 year. And let's see a few examples from the last weeks for the forecast that the algorithm generates us on a daily basis. We can see like an example from last week. This forecast was generated on 21 of March. It's a 3 days forecast, and we can find the best stocks that the algorithm told us to hold for a period of 3 days. We can find here the dates of the forecast from the 21 up until the 24. We can see that NIU, which was located on the top of the forecast and had the strongest signal of 6.1, had moved 11%, 11.5% in those 3 days. And we can see in the bottom the INO first average. We took all the performance, all the 10 results of those stocks, and the average was 4.7. And comparing it to the S&P on the bottom here, that we can see that in the same period of time, made 1.85. So the majority of the stocks that we see here actually outperform the S&P. So we can see the signals here located on the middle of every square, and we can also find the predictability that is in the top left of each and every square that we're seeing in this table. So that was the 3 days time frame. Let's see the 7 days as we saw earlier. Here we can find the best stocks to hold for a period of 7 days. And we can see that the algorithm gave us also in these volatile days, you can find some stocks that moved up, and actually the average of this forecast outperformed the S&P 500. We can find stocks such as TREE or TWST, VSEC that made 8%. We can see some of the stocks didn't went to the right direction, as we can find here, such OLP and HOV. The algorithm is not working 100% all the time. We are trying to keep up with the best result and be optimist, make the algorithm work in the optimal way, but mistakes are happening, so we have to take that into consideration. The 14 days example that we see here actually give us the best stocks to hold for 14 days. That was generated on March 13 in this current here. We can see some stocks that moved really in a really good way, such as AT&M that made 64%, and AG and AGI that we see that moved 8 and 13% in the same way. The 1 month, if you like, longer time frames and not trading on a daily or weekly basis, you can use this excellent time frame of 1 month. You can find that this specific forecast was generated on 25 of February. This is the ETF package in which we can find the best ETF from the US universe. All this is of course, are trading in the US market, but we can see that the majority or almost all of those ETF are actually pointing on Europe. EWP, for example, is Spain. EWI is Italy. Sweden. We can see Germany. European banks. MSCI Europe. We can see that the majority of the ETF in this forecast that was generated on 25 of February. I remind you that the going down market started on the 21 of February. It's 3 days after that, we can find that the algorithm actually pointed us to Europe, and we actually have some forecasts, and we're gonna see them, that it was even earlier than the 20, that the algorithm saw that we need to put more weight to the European stock exchange.
Yes, and this is, by the way, a very good remark. So it was possible to generate alpha, to generate portfolio with positive returns over the last volatile month, just by utilizing US ETFs. And so on the very same time that the algorithm had a bearish forecast for the US market, we started this webinar with the negative S&P 500 forecast. On the very same time, we had a positive forecast for in the ETF universe for European ETFs. And on the left side, we can see a forecast from 3 months ago. Yes, please.
Which is interesting, because we are seeing a lot of energy stocks in this specific forecast for 3 months. If you check XLE, for example, it's one of the most successful sectors in 2025, the energy sector, and we see the movement and the performance of those stocks. We're going to talk about how the algorithm can actually locate the best sector from the S&P 500, the 11 big sectors, and we can focus on the stocks that are in this specific sector. But we can see a really, really beautiful forecast of energy stocks from December 25 for 3 months, and we can see that the average was 8%, while the market went down by 4%. let's say that if you succeed not to lose money even in 2025 or skipping it on the zero, making 8% in this specific market is really remarkable, and that's what the AI algorithm actually helps you to do. And to the right, we can see again stocks from the US market that the algorithm suggested to short. And we can see while the market went down by 5%, the INO first average went up by 22.95 if you decided to short. And one of the strongest interesting shorts that we can see here with the high predictability, it's Abercrombie that went down by 50% in those 3 months. And that's a really nice short that you can do and have a really nice return of a period of 3 months. And the last time frame, the time frame that we have is the 1 year. Yeah, the algorithm can read and can predict forecasts for 1 year forward. Here we can see this forecast was generated 27th of March 2024, and we see a lot of stocks that the algorithm predict to the following year, which actually made 25% in average, while the S&P did only 9.5. So we saw 6 time frames, short time frames of 3 days, 7 days, 14 days, and longer time frames of 1 month, 3 months, and 1 year. You don't have to choose between the time frames. You are getting all the time frames on a daily basis. Every day you get in the forecast with 6 time frames and the best stocks for each and every time frames, and you can choose the time frame that you want to focus on. Or even more than that, focus on a couple of time frames. For example, for the 1 month, 3 months, and 1 year, which has the highest predictability level, and get the ideal investments from the algorithm. So you're getting all the 6 time frames. You just have to choose the time frame that you are interested in.
Yes, and this is the first tip of the day. Always focus on the most predictable assets and utilize the longer time frame in order to identify those assets. You will notice that the longer time frames are more predictable, as Ben mentioned, and use the predictability as your leading indicator in order to identify opportunities in the market for both long and short. And another thing that's unique about this predictive algorithm, as we started this webinar, is the fact that it also can help us to navigate in the market during a volatile time. Every day, the algorithm generate daily forecast for the S&P index, and it's part of our top 20, top 10, and top 5 packages. Here you can see an example from 2023, while on March 2023, we started to see a negative forecast for the S&P 500. You can find it on the left side. And among the assets that had the bearish signals back then, we have identified several banking stocks, several stocks that belong to the banking sector. We can find here First Republic Bank, FRC, and Silicon Valley Bank. And during this period, Silicon Valley Bank basically collapsed. And it's very interesting to see how the algorithm was able to identify this short selling opportunity. On the right side, we can see a similar example from February 2020, while we started to get the news from China regarding the COVID virus. And we can see that the focus for the S&P was negative, and the assets with the strongest signal came from the bottom of this heat map. And it happened also last month. On the left side, we can see the bearish focus that we had on 28th of February 2025 with the negative S&P 500 forecast. And also we can notice that the asset with the strongest signals came from the bottom of this heat map. And on the right side, we can see 7 days forecast from 1 week ago with a bearish forecast for the market. So I would suggest you, and this is maybe the second tip, utilize the S&P 500 forecast that you are receiving on a daily basis whenever you're deciding, in order to decide whether you would like to be in the market or to focus on long opportunities, or just to wait until you will see positive S&P 500 forecast. You're going to be the first one to know, because if you're monitoring this forecast, you have a very good tool that can assist you with the market development, basically.
Yeah, and as you see, you can trade long, you can trade short, and let's see which packages we offer you. I know first, the first one is the AI package that actually takes all AI stocks and to one pool of stocks, and the algorithm scan this universe and gives you on a daily basis the best AI stocks for different time frames. 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. And you can see some different time frames from this specific package. For example, the 3-day time frame from 21 of March, not long ago, we saw that NVDA, Rocco, and AIC and NIU was one of the leading stocks that the algorithm suggested to hold for 3 days. In the same way, for the 1 month time frame, we can see that the algorithm on January 2nd actually gave us a great prediction on TWLO that moved 35%. We can see OKTA, we can see Netflix, and of course, Palantir. And this package made in 1 month 12%, while the S&P did 2.7. A lot of money this year is running into AI stocks. You can see and feel how the AI universe is growing and developing in a really fast phase. And the AI package is one of the best potential package that you can have for 2025. And of course, I'm not talking about PLTR, one of the leading stocks in the AI universe. We can see Palantir was actually suggested on 21 of October 2024. And we can check the predictability to the left here. We can find that it has one of the highest predictability in this specific forecast. And in a 3 months period, this stock made 88%, which is, of course, remarkable. And the algorithm can locate and see the best stocks from each and every universe. And I'll remind you, the ones, if you scan the QR code for our WhatsApp group, you're going to see what the algorithm thinks about Palantir for the next 3 months. And so we're going to show the QR code again at the end of this webinar. And you can see for free what the forecast of Palantir, of course. Another interesting package that we have is the ETF package, which I really love. In this specific package, we can see all the US ETFs in one package that the algorithm gives you a diversity of ETF from geographical different places and sectorial different sectors. Sorry. So in this specific package that generated on February 3rd, we can find a lot of the European ETFs that we talked about in the beginning of this webinar. I'll remind you, the big drop came on 20 of February. That's almost 18 days, 17 days after this forecast was generated. So the algorithm saw that you have to go and put more weight on the European stock exchange and gave us some interesting sectors in ETF, as we can find here, EWL, which is Switzerland, FEZ, it's the Eurostock 50, EWI, it's the Italian stock exchange, EWD is the Sweden stock exchange, And we have plenty other ETF that the algorithm gave us from the February 3rd. So you don't always have to be in the US market. You can, of course, diversify your investments for other places in the world by trading US ETFs. In the same time period, the S&P went down about 3%, which is kind of hard to get positive returns in this going down trend. So choosing different sectors all the time and diversity or investment can be really helpful to outperform the market, as we can see here. And of course, it's not just a European ETF. We can find some other ETFs, such as semiconductors, home builders, XLY, XLC, many other ETFs that you know from the US market. But in those days, in the last, in February and March, we can see here again that the algorithm was really focused on the European market that actually gave us really good returns in this times frame of 3 days from the 5th of March and 23 of February. For 14 days, we can see the positive return that the algorithm gave us while the market went down by almost 4%. So the ETF package is always updated, always alive, and I think it's one of the most interesting packages that we can suggest you. And from this specific universe, and if you can see like for 1 year, as well as I said earlier, we can find like a different kind of ETFs, such as KIE, which is the insurance company, or XLK, which is the technology. The FAS is the financial sector leveraged by 3. So you have also leveraged sectors here. And we can find the home builders and even DXG and DQQQ. So that was the ETF package. Again, one of the most interesting packages that we have to suggest you. And we want to talk about a little bit the markets in 2025. I'm sure that you all want to hear and see what's going to happen in the markets. A lot of volatility. Nobody knows if the market goes up or down. But if we take it into perspective, we can actually find that some interesting things about the S&P. This was taken like 3 days ago, 4 days ago, and the S&P actually went down by 3%. Right now it's around, let's say 5%. The Magnificent Seven went down by 12%, which can see that the majority of the weight of the S&P actually went down pretty hard. But if we are taking the 493 stocks of the S&P 500, it actually went up by 1%. So it's really interesting to see and understand that the majority of the market, as they say, that like the RSP, the equal weight S&P, actually is around the 0, or as you can see here, 1%. So you can find not all the market is collapsing. A lot of the stocks that you know, I think the most of you are holding one of the Mag 7 stocks, at least one of the Mag 7 stocks. So the majority of the market is still around the 0, and we can take that in advantage later this year, especially when we are located just before April, which is one of the most successful and positive month of the year. If we look in from 1928 up until 2023, we can see that the April average return is around 1.36, as we can see in this specific slide. So we have to stay positive about the market. And the next subject that I want to talk about is the stock market intelligence that Yaron suggested earlier, and how do we use the algorithm as a stock market intelligence tool. And we can see that if we're focusing on the middle of December 2024, we can see the market actually dropped around 4%. And the AI algorithm actually predicted that drop. If we take a look of the forecast that we are actually giving to our institutional clients, we can see that we saw that the day before, or actually the same day of the drop, we got the S&P was negative. We can see the VIX, the volatility index, is in the top of the forecast. We can see a lot of the stocks are colored red, as we can see here in the S&P 500 forecast to the left. We can see that in the indicators that we saw a lot of the interest rate, the government bond interest rate was positive, as you can see here, and the majority of the sectors of the GICS level 1 sector was negative as well. So all of that suggested us that we are going into a really volatile market and gave a heads up to our institutional clients. And today, in this webinar, we are actually suggesting our institutional tools also to you guys, to the private investors, and I'm going to talk about it in a minute. So if we're checking 2025, we can see that we started the market also in a quite volatility. You see a lot of volatility in the market. The S&P went up and then down by the end of this quarter, and went down by 5.4%. But if you were in the right place in the right time, as we can say at the beginning of the year, if we'll check our indices forecast, which again, also available only to our institutional client, we saw that the DAX, the German DAX, was much better than the S&P that was colored red here. And if you would follow this suggestion of holding the DAX and not even shorting the S&P, it's just selling the S&P, you are with 12% from the beginning of the year up until today, while the S&P went down by 4.95%, as we saw earlier. But this decision in the beginning of January, this was generated on January 8th. You can see the date right here, this green line. We can see that still these two indices are quite at the same place. The algorithm gave us a really positive forecast for the DAX and a negative forecast on the S&P 500, and that could make a big difference. And instead of holding US stocks, you could focus on German stocks or even just European indices such as FES, such as the Euro Stoxx 50, Euro Stoxx 600, and avoid this drop that we had in the US market. But if you're still in the US market or focusing only on the US market, the algorithm can help you focus on the best sectors and the best stocks from these specific sectors. For example, in the beginning of the year, for the January 1st, 2025, one of the strongest sectors that the algorithm located was the XLC, the communication sector, which was, by the way, one of the most successful sectors up until now. We can see that if we're drilling down to this specific sector, we can find stocks such as Netflix, Fox, TWO, and Fox A that all made really positive returns from the beginning of the year. And I guess you know how hard it is to find stocks that made some positive return from the beginning of 2025, but the algorithm can do that for you and help you focus and locate the best investment universe and stocks from each and every universe, if it's the European stock exchange or the American stock exchange. And other stocks that we all like, in the beginning of January, we can see that the algorithm was really positive on Palantir and on FFIV, which made 13% and 5% up until now. Although Palantir is really was volatile, but still keeping its positive returns from the beginning of the year. And another example for that is the stocks Hood and KTOS. If you know the stock KTOS, a really interesting stock KTOS. It's actually a drone producer, and actually had some big contract with the US Naval, and we can see that the Hood as well came with 12.5% from the beginning of the year, and the algorithm help us to focus on the best opportunities in each and every universe. Again, even if it's a going down market, we can find some good stocks to be in. And rather than good stocks and located where to be, we can also it can also warn us from again going down markets as the drop we saw in 20th of February. Again, the algorithm gave us a heads up, and this actually helped a lot of our hedge funds to be careful about the market. And this specific in 20th of February, it's a day before the big drop that we see here. We saw the S&P and the Nasdaq in the red part of the table. We saw the VIX, the volatility in the top of the table, and also the VXN, which is the Nasdaq volatility at the top of the table. All of those signs actually suggested us that the market is going to be volatile in the next few days. And as we go by the days, we saw the S&P redder, and we saw more of the indices are adding to these red zones that we see in our forecasts. So that can help our institutional clients to avoid the market, and now it actually can help you as well to avoid the markets and get the best opportunities. Because in this webinar, we are actually suggesting you the institutional portfolio. Institutional portfolio, it's the most unique package I think that we'll launch so far, because in this specific package that we're gonna see what it contains, we are holding the best assets on a monthly basis for you guys from the entire investment universe. If it's the ETF, if it's the market, US market, if it's the aggressive stocks or S&P 500 stocks, we're just giving you the best of the US market on a monthly basis, giving you straight ahead the top 10 stocks that you have to hold for the next month, for the next 30 days, without any changes, without any time frames. You get just the best stocks that the algorithm has to suggest from different universe. And for example, one of the ETF that this package suggested was, of course, the European Stock Exchange that we talked about earlier, all the European ETF. We can find there as well of the European ETF that we talked about earlier, and see the returns that they made from the beginning of the year. We could be with 12%, 15%, and 70% instead of being in minus 5%. So the institutional portfolio in every market, if it's a going down market or going up market, we are giving you the best long opportunities to be in. So if we see the US market is more negative, we're giving you other ways to invest in maybe other geographical places, not just Europe, maybe the East, maybe some Brazilian market by ETF, of course, all traded in the US stock exchanges. But this specific package gathered the best of the best out of all of the forecasts, with the best predictability, the long-term time frames, and be giving you the best stocks to hold for the next month without any time frames. You don't have to do anything. You just have to sit back and get the best forecast. And I can give you a glimpse of one of the portfolio that we had in the last November. This actually product was available only to institutional clients, but now we are opening it to a private client as well, so you can enjoy that as well. In the last November, we can see in the 13th of November, the stocks that the algorithm chose for the following month, and you have to hold it for the entire month. We can see here XLC, XLY. We see some stocks that the algorithm gave us, and we can see that the return was 3.6, while the S&P was 1.65. So this specific portfolio is one of the rebalancing that we have. in the November 24. And again, this institutional portfolio is holding a lot of stocks that you probably know, such as Palantir from the beginning of the year. We have Palantir, we have Meta, we have Visa, Hood, as we talked about. We have some of the leading sectors, such as XLC, which is the communication, XAR, it's aerospace and defense, stocks as eBay and FFIV. So you can do this, you can have these positive returns from the beginning of the year, while the benchmark, the S&P, made almost minus 5% by just holding those stocks on a monthly basis. You don't have to do much, just buy those assets in a once a month. It's actually once every 4 weeks. And the research team and of iKnowFirst will give you the top 10 stocks that you to hold for the next 4 weeks. Of course, you have nothing to choose from. I mean, you don't have all the time frames of 3 days, 7 days. This is more of a passive investment. You just get the 10 assets that you have to hold for the next month, and that's it. Just hold it until the next rebalancing. And the next rebalancing, by the way, is starting in 2 days, you're on?
Yeah, on Wednesday. The next rebalancing on Wednesday, so you can be part of this rebalancing. We have added the link to this unique package to the webinar chat window. By the way, by using this solution, on the beginning of the year, we were focusing on XLC. Then we have conducted the drill down that Ben showed you a few slides ago, drilling down to the XLC, identifying the best stocks from the XLC sector, and there you are receiving the very same tickers that we see here and also in the previous slides. So basically, we are doing all the work from you. We are analyzing all the different prediction that the algorithm is generating, and we are providing you 10 tickers that are relevant for the upcoming 4 weeks, upcoming month. And you have access to the first portfolios that our institutional clients are receiving on a monthly basis, basically.
Yeah, and it's only available on our webinar sales. You cannot find this package in the website. This is one of the webinar sales that we suggest to you guys. So as we said, every 4 weeks we have a monthly rebalancing. We are giving you the best 10 stocks to hold for the next following month. And again, this solution was available only to institutional clients, and now we are opening it to the private crowd as well. So I think it's one of the best packages or one of the best solutions that we ever launched, because you don't have to choose packages, you don't have to do anything. We are doing all the job for you. The algorithm does all the job for you, and scanning all the US universe and giving you the best solution, best opportunities for the following month. And that's with $349 per month, $349 per month. I think it's one of the most amazing packages and solutions that we suggested. The second webinar sale that we have is 1+1 for $299 per month, in which you can choose any of the stocks, any of the packages that we saw. If it's the AI package, if the ETF package, if it's the S&P 500 package or the aggressive package, you can choose whatever package that you want and combining it with another interesting package. For example, you can choose the ETF package and the top 10 or the best AI stocks. For $299 per month, you have no commitment. You can cancel at any time. If you just want to try the algorithm, just choose 2 packages and do it on a monthly basis. And our third webinar sale, which is, I think, the most unique one, is actually a combination of the last two sales. It's getting the two packages for $269 per month, which is cheaper. You can choose two packages from every universe that you want, and you're getting the institutional portfolio for free. So just for $269 per month, of course, paid every 12 months, you're getting two packages for your choice and the institutional portfolio, which you'll get the 10 best assets to hold for the entire month, every 4 weeks. And I think this is one of the best webinar sales that we had and available for the next 24 hours. And keep in mind that the next rebalance of the institutional portfolio is happening in 2 days. In the 2nd of April, we are sending the rebalance, the new stocks, the new AI stocks that the algorithm actually find for you. And if you want to join this portfolio, you have to do that before the 2nd of April. And I think it's one of the most interesting sales that we have, and it's available for you for the next 24 hours.
Right. All the three deals are available in the webinar chat right now. The first one is the AI Power Institutional Portfolio, has been mentioned. The second one is the 1+1. You can choose from the variety of packages that are available in our website, and replace those two packages on a monthly basis. By the way, all the 1+1 deals, the second one and also the third one, it's possible to change the combination on a monthly basis. And also, of course, Ben's favorites, deal number 3, two packages of your choice, plus the AI Power Institutional Portfolio that's available in the third link in our webinar chat. And I see a lot of people that are asking what do we suggest in terms of packages selection. And our suggestion right now, and we will provide a reasoning for this selection actually later on, are the ones that you see on the screen right now. My choices for the upcoming month, the first option is to choose the top 10 stock picks that our algorithm is picking, and also the top ETF package. And the second option that I would advise you guys to choose is the top Chinese stocks. Those stocks are listed in the US market, as well as the top energy stocks. And again, the reasoning will be provided at the second part of this webinar. What about you, Ben? What is your choice for the upcoming month?
I think they understand that I'm a favor of the institutional portfolio, because really you haven't seen such a product so far. You just getting the best out of the best from all our packages. I mean, you don't have to choose, you don't have to do anything, just getting the top 10 stocks that you have to hold for the next 4 weeks. The best stocks that the algorithm they have to suggest, if it's, by the way, ETF or of course stocks, and you just buy that and hold for the next 4 weeks. And it's a long, of course, it's a long only portfolio. We don't suggest any shorts there, so keep that in mind as well. So that was one of my stocks that the packages that I preferred. The second one is the BAS package. The BAS package, if you all remember or know, or it's all the stocks that were talked about or talking about in the social media or in the digital media. So if it's Palantir or if it's Hood, Visa, the Mag 7, the most mentioned stocks in the US universe. And actually, those stocks were fallen pretty hard in the last 3 months, and you can find some of them in really good prices. So when the market will recover, I think those stocks can lead with performances. Again, the volatility and the risk a bit higher in this specific package, but I think that the potential is also high when the market is going to recover and going to go up again in a going uptrend. I think those stocks can actually perform really well. So be ready for the shift. And those two packages, I think, are really interesting. Okay, so we get all the links in the chat that you can find them also in the website. And I see a lot of questions about the institutional portfolio. And I really recommend. I'm gonna answer some more questions later on. And of course, in the end of this webinar, we're gonna see the prediction for the next month. So stay tuned for the next 20 minutes. And we're gonna talk about really quickly about our second solution, our artificial intelligence trading strategies. That's also combining the GEEX level 1 and GEEX level 2, the 11 main sectors from the S&P 500 and the 24 industries of the S&P 500. The industries are, for example, the semiconductors, the home builders, the banks, metals and mining, and many others. So we suggest different kind of strategies to our institutional client, basically different kind of risk measures, if it's combined strategy, if it's long only, long and short, or low risk strategies. I'm going to show you one of the most interesting strategies that we suggest. It's the 25 stocks from the S&P 500 universe, while the algorithm is focusing and scanning all the S&P 500 stocks and providing us the best 25 stocks to hold for the next month. Actually, it's kind of similar to the portfolio, institutional portfolio. It works once a month, and we suggest the best stocks for the following month. And we can see the returns of this strategy is pretty amazing. If we're taking 4 years backwards, while the S&P did 73%, we did almost 230%. And this specific strategy was sold to one of the biggest investment houses here in Israel. And it's something that we are really proud of. And you can see the returns, and you can see the performance of each of every month. It's actually available in our website as well, to whom of you that want to focus and see what we did in each and every rebalance. The second strategy that I think is really interesting is the GEEX level 1, which the algorithm is also focusing on the best 3 sectors out of the 12 sectors of the S&P 500. We can see that the return in the last 5 years was 141% and outperformed the S&P 500 by 57%. And this simple strategy is just focusing on 3 different sectors in every month. And we can see the returns in 2024, for example, we had 30%, while the market did 25%. And it was really hard to beat the market, by the way. In 2024, the same X7 that we talked earlier that in this year was in minus 12%, in 2024 made almost 70% and was responsible for almost half of the return of the S&P 500. So we can see it was a really concentrated market in 2024, but still the sectors actually outperformed the S&P 500. And here you can find in each and every the rebalancing dates. In each and every rebalance, we can see in which sectors the algorithm chosen. We can see it marked with yellow. So we can see all the years and all the sectors that the algorithm focused on, and you also give them weights, and we can see 2022, we can see 2024, and a lot of XLC, as we saw in this year. The communication sector is still one of the leading one by the algorithm. So if any of you are institutional clients and want us to suggest you some of our strategies, please feel free to contact us by the website or by the mail that you see on your screen. Okay, Aaron, you want to talk about a little bit
Yes.
crypto packages?
Yeah, I saw several questions whether we're covering cryptos and whether it's possible to receive daily crypto forecast. So the answer is yes. We do providing daily forecast for the crypto market. Basically, our AI is analyzing more than 200 cryptocurrencies on a daily basis and providing the very same ranking that we have seen for the equities and for the ETFs, just for the crypto market. And it's basically quite unique. You will receive daily forecast for the very same time frames, short term, mid term, and also long term, just with the best cryptocurrencies opportunities. On the left side, we can find the 10 cryptocurrencies that are algorithm picked in this forecast by the end of 2024. With the 10 cryptocurrencies that appear there. On the right side, we can see a 1-year forecast for the cryptocurrencies market. Just think about all the things that happened during the last year. We can see the performance of this forecast on the right side, assuming passive investment. And we can see also the average performance of this crypto portfolio over those timeframes, 1 month and also 1 year. Of course, the cryptocurrencies packages and market is more volatile than the equities one. So take it into consideration. Don't invest your entire portfolio into the crypto currency market, but it's a very good, and actually it's one of the unique research tool and ranking tools that are available in the market right now for the cryptocurrency side as well. And in the very same way, we are providing daily forecast for over 200 world indices. It's another package that's available. For instance, by using this package, it's possible to see Europe on the beginning of the year and China as well emerging on the beginning of the year. So it's a very good tool that can assist you to identify the most promising regions around the globe by utilizing the ranking that our AI algorithm is generating on a daily basis for the over 200 different world indices.
And also American indices. Let's not forget that. Of course, besides the global indices, we have the Russell 1000, Russell 2000, we have the S&P, we have the Nasdaq 100, S&P 100. All the main indices in the US are available in this specific package, which I think is like the greatest intelligence tool that you can get for the market. So the world indices package is really unique and available as well. In the same way, we have the fixed income package, the commodities package, which now look pretty interesting. We saw the energy is one of the leading sectors right now in the markets in the 11 Geeks level 1 universe. So commodities can be also interesting right now. In the same way, we have currencies forecast for over 120 currencies. European stocks picks. This package also can be really interesting. We saw that Europe is pretty strong. We saw the banks in Europe is pretty strong. In the last webinar, we talked about it as well. The DAX was also one of the leading indices, so Europe can also be a great solution for the following month. And in the same way, we have every main stock exchange around the globe, if it's Canada, if it's the UK, Japan, Italy, Australia, Hong Kong, of course, and the both Chinese stock exchanges.
Yeah, I see a lot of people from Europe today in the webinar. So actually, you can use also the 1+1 deal to choose Europe or to choose basically the link that I've just pasted in the chat. If you would like to focus just on Europe, it's a very good tool to. You can get the package that focusing on the European markets only, or at any global stock exchanges that is out there, basically.
Yeah, and again, the Indian market, I saw a lot of Indians as well in our webinar today. We also have a big collaboration with one of the leading brokerage in India, while the S&P, while the I know first is actually giving forecasts for more than 100,000 Indians. In the same way for the Indian market, if it's the large cap, mid cap, small cap, and 6 time frames, this is available by Shunya of Invasia, and this big collaboration that we're really proud of is almost available for 1 year. So for Indian clients, you can use our forecast through the Shunya platform as well. And let's see what happened from the last webinar that we did here. We talked about on the March 9th. We saw the forecast for the next month, and by the way, by that webinar, we also saw really interesting things. We saw the volatility is still here. If you remember, the VIX and VXN was at the top of the table. We saw the European banks that went up by 1.5%. We saw the Asian market, the Hong Kong, the Hang Seng Stock Exchange leading the forecast, and it actually was positive in almost 2%. And from the other side, we still saw the airline company, if you remember, was in the bottom of the forecast, and it moved down by 13% from March 9th, which is 21 days in 3 weeks. We saw that big short on the airlines company. And in the same way, we saw the banking region in the US and the regional banks in the US also quite negative. The semiconductors was negative. We can saw the Russell 1000 and Russell 2000 that also went down by almost 5%. And so that was the last forecast that we saw in the last webinar. And now we're going to see what's actually the algorithm thinks about the next month. As we can see here, the volatility is still in the markets. We're seeing the energy sector is one of the leading sectors, although the predictability is not that high, but the signal is pretty strong. And we saw the healthcare and the consumer, also XLP is quite positive. XLY, which is the retail consumer, is pretty negative and in the bottom of this specific forecast. And if we're taking a look of the indices universe, we can see the volatility is still here. You have to do your stock picking wisely. You can see Europe is really positive. We can see the Indian market is back to the positive ways. We can see that in the last few weeks. A lot of European stock exchanges, and in the bottom, we're still seeing the airlines company, Taiwan, the banks the banks in the US still not very positive, and we're seeing a lot of diverse indices from Europe that is in the really positive side of the map, and some of the US sectors which in the negative part. So in the next month, you still have to do your stock picks in a very careful way. And of course, you can use our AI tool to do so and find the best opportunity for long and for short in the market for the next month.
One thing that is interesting in the level 1 forecast, we have seen XLE at the top part of the sectors as one of the leading sectors. As you mentioned, the predictability is quite low, but it's still there. And the second indicator is XOI. The oil and gas index is also positive. And
by the way, the
also,
XNG is also there. The gas is also the natural gas, also positive. So it seems like an energy kind of a month. And although the predictability is not that high, we still seeing high signals from the energy part of the map.
And here we have just received the reasoning for the picks, for the packages picks that we had before. But yeah, please go ahead. I don't want to interrupt.
Yeah, but also it's a nice it's closing the story when we see the level of energy is high. When you're seeing the airlines company in the bottom, it's making sense. Of course, the algorithm doesn't know what's XAL and what's the XLE. But if you want to tell the story, you can see that the energy levels and the oil are going up. Most likely that the airlines company and the transportation will be negative in the following months. So that's the story of this month. And of course, still the European stock exchanges look quite good. But if you're in the institutional portfolio, you don't have to worry about all that because you're just getting the best stock picks for the next month. And you don't just sit back and relax, of course, and get the best stocks and assets that the algorithm can suggest you on a monthly basis, long only assets, and as mentioned earlier, for $349 per month, only available on the webinar sales. Again, the second sale is the 1+1 for $299, which you can choose 2 packages of your choice, no commitment, you can cancel it anytime. You can combine many stocks and packages that you saw in this webinar. So feel free to use the second webinar sale. And the third webinar sale is the 12-month subscription, paid every 12 months for $269. You can choose any 2 packages that you like, and you get in the institutional portfolio for free. You don't have to pay for it. You're getting 2 packages and the portfolio managing that we suggest you for free. Again, this sale is available on the chat and in the website. So feel free to sign in. Okay. I think it's time.
I see a lot of questions about the institutional solutions. So we will go over all the questions. Don't worry about it.
Yeah, let's do so.
Let's do so. Okay. In the meantime, everyone here, please take your phone, open your camera, scan the WhatsApp, the QR code in order to enter our WhatsApp community. And let's answer the questions that we see. Okay, who's first? Okay. Is the forecast published daily for the next 30 days? Yes, the forecast is being published on a daily basis. Before the market opening, you are receiving the most updated forecast with the best opportunities for the different timeframes that we mentioned in this webinar, short-term, mid-term, and also long-term. Okay. Which timeframes we should use? in order to receive the best predictability, Ben? Okay, so in order to, yeah, please, I didn't see that you are drinking.
Yeah, the best predictability, of course, is in the longer time frames of 3 months, 1 month, 1 year. You can see that in the forecast that there you can find the highest predictability values, and the predictability is really important. It's actually more important than the signal. You have to first filter your stocks by predictability and then choose the best signals one. That's a tip from us to you. Keep the predictability high, and you'll find good results. And the same way, someone asked us about if it's a day trader, what would we suggest? In the website, we also have a 1 day forecast. I mean, like 1 to 6 days time frames instead of the long time frames. You can use that, or use the short time frames of 3 days. But again, the predictability there is much lower, so you have to take that into consideration. But basically, you can use any of the ways to do a day trading.
Yeah, and also I would say that also the top 20, top 10, top 5 package, specifically in the short time frames, is relevant for short-term trading. I do suggest to utilize, even if I'm using the algorithm for short-term trading, and there are many clients that are doing so, focusing on the short term, I still suggest to double check it and to verify the signals with the longer term time frames, even if I'm using it just for short term. The confidence level in the longer time frames, the predictability is higher than the short-term time frames, and by using the longer time frames or verifying with the longer time frames, it can increase the confidence level of your position. So I would suggest to utilize all the time frames, even if I'm using it just for short-term trading. Okay. Yes, there are also questions about if
I
there
see
is a
people
time.
already joined us, joined the service. It's really appreciate it that you liked the webinar. Thank you for the compliments, and welcome to the service. We'll try to stand in your expectations. Someone asked about if they can see the past performance of the packages. Yeah, you can do so in the website. To the right in the homepage, you can find all our packages. You can click on any of them and see which stocks are actually related to this specific package, and of course to see the past performance of those packages.
Right. How is the institutional package different than the top 10 package?
The institutional, you want to go? Go.
Yeah, this is when we actually sending the picks for the institutional package, everything is open for us. Our research team is going over actually the entire universe, all the stocks that are being, all the sectors, and conducting drill down to the leading sectors. So we are not just focusing on specific universe. We are trying to figure out what are the best opportunities, regardless to a specific sector, regardless to the specific universe. We are combining different forecast, different universes, and we are trying to take into consideration the confidence level, the predictability, in order to focus on the most predictable assets, most predictable sectors, and to conduct a drill down into the leading sectors that are suitable for each market regime, basically.
Yeah, and I'm going to elaborate quickly about that, because we have the signal that is actually speaking the same language to all of our assets. The signal is our internal index, and it goes through all of the assets. So we have a global look of the investment universe and can see, for example, in which countries actually we have highest signals. We can focus on that specific countries and then see the sectors that are the best out of this in this country. After doing so, we can actually drill down into the sector and find the best stocks of each and every sectors. So we usually do that in the US market because it's all used to be one of the leading markets in like for the last 5 years. In 2025, we're seeing a bit of a change in the strongest sectors are in the European, but again, we are doing that every month. We are checking the best sector, the best stocks, and providing it to you on a monthly portfolio.
Great. Let's see. We will try. We are trying to answer. There are many questions, but we are trying to answer as many questions as possible. There is a question regarding the institutional one. If I'm getting the institutional package for free with the 3-month option, do I have a yearly commitment or it's a monthly commitment? So if you are using the 12-month deals, you have an annual commitment, but you're receiving a lot. You're receiving 2 packages, and you're receiving also the institutional package. The first link for the institutional portfolio is without any commitment. You can test it for a few months and then decide how you wish to continue. However, we do suggest to utilize the deal number 3 because it's something that available today. It's not going to be available after this product introduction. Okay.
I see some people looking for the link to buy the service. You can find it in the chat of this Zoom, in the bottom of your Zoom. You can find the chat item, click on that, and you'll see all the links to the different deals. And of course, those deals will be available in our website or are already available in our website. Is that you can actually join in.
There is a question: what is the difference between the top 10 cryptocurrencies and the major cryptocurrencies packages? So the top 10 cryptocurrency package scan the entire crypto market and identify the top 20 opportunities on a daily basis for each time frame. The second solution, the major cryptocurrencies package, is providing you daily forecast for the leading cryptocurrencies, including Bitcoin, Ethereum, Solana, the major ones. Basically, the largest cryptocurrencies are available there. So in the first solution, you can identify opportunities from the entire cryptocurrency market. With the major cryptocurrency package, you are receiving a fixed forecast for the leading major cryptocurrencies, meaning the leading ones: Bitcoin, Ethereum, Solana, etc. Okay. Yeah, there is someone that asking. Okay, if you cannot find the specific package, please write in the chat, and we will send you the specific link to the package in order to make your life easier. But everything is available in the webinar chat. Okay. Any other interesting questions, Ben?
No, I think we answer most of them. Well, so that for summing it up, it's a volatile time in the markets. We can see and hear, but we have to take it into a proportional you saw that basically the S&P or S&P 493 actually moved like 0.5% or maybe 1% up. So it's an interesting thought that not all the US market is built up from the Magnificent Seven. It's all not just NVIDIA or Tesla. There's a lot of opportunities in the markets, and the AI will help you to find them throughout all the diversity of the packages that we have. You can do so, or through the institutional portfolio that we can do it for you. We have an interesting time of the market. I think we are close to the bottom, maybe getting close to the bottom. So it's a good thing to follow the market and see when the positive trend will come, and it will come eventually. So be patient and let the AI help you choose your investment opportunities. And in the same way, thank you for this for joining our monthly webinar. We hope we help you to get some proportion for the market and see what's ahead. And thank you, Yaron, again.
Thank you, Ben. Thank you. It's as mentioned, it could be a very good or interesting timing to build a long-term portfolio. And we are providing you the most advanced tool that is out there that can assist you with this process, basically. So, Ben, thank you very much for a very interesting webinar in the challenging period. And but you know, with every volatility, there are also opportunities. So try to take advantage of those opportunities. And we are here for any questions or to support you with any. If you have any questions after receiving the first forecast, we are here to support you as well.
All right. Thank you, guys. See you next month.
See you. Thank you very much, Ben. See you. Thank you very much.
Bye-bye.
Bye-bye. Have a good one.